Before we go on ahead with asking you some questions, let's do a brief introduction.
Morning. I'm Nimrod. I'm the CEO and co-founder of Simplex. We enable fraudless payment processing, currently focused on the cryptocurrency ecosystem. This month, processing about 100 million, by the way. So that's it.
Hi, good morning. My name is Matan, CEO and founder of DAOstack. I've been working, before I've been in the academy for 12 years doing PhD in theoretical physics. And the past 4 years, I've been working on the blockchain, establishing infrastructures for DAOs, on which we'll speak more in the panel.
Hi, I'm Yoni Assia. I'm the CEO and founder of eToro, which is the world's largest social trading network. We have 8 million users who trade stocks, commodities, indices, currencies, and cryptocurrencies, and everybody can see what everybody's doing and copy one another. And we do about $2 billion volume a day, about 10% of that in the top 7 cryptocurrencies. And we're seeing a huge shift of our entire ecosystem for people trading stocks to people trading cryptocurrencies.
Thanks. Let's start with the basics. We started out 2017 in a completely different place. We saw Ethereum rise over 4,000% growth. Bitcoin was, I think, $960 at the beginning of the year, and we've already seen it surpass the all-time high of $20,000 just about a month ago. It's been a very exciting year, and every water fountain conversation these days feels like is all about crypto and what's going on in this space. Now, you guys have been not only monitoring or observing from the side for many years, but have actually taken a very significant active role in shaping a lot of this industry and being thought leaders in Israel. And I want to ask you a little bit to share with us, what is this, journey has been like to you since, we've first started looking at the space in 2011, 2012. For people who have joined just in this recent few months, and for people who have been with us for several years.
So it's been a very bumpy road. And when Shelley earlier said that Bitcoin doesn't really affect anyone's day-to-day life, I tend to disagree. And no, but it's been, I'm in this industry from like 2012, raising funds for a crypto-related startup was close to impossible at the time. It was, we looked like the weirdos in every conversation with every investor, with regards to models, with regards to, just thinking about it as an industry to look at. Especially here in Israel, it was very difficult. But it's important to note that I think it's still the very early days. It's not like someone asked me a few days ago if I think there's still opportunity in this space. I told them I see opportunities anywhere I look. It's crazy. It's just the very early days. Like 0.5% of the population heard about crypto. Maybe 0.5% of those have crypto. Personally, I think most of them would buy it with their credit cards, but slightly biased. So yeah.
So the first, I would say, thing I can say about this journey is excitement. For me, I was like forever, I knew that I want to be a physicist, like from age 5, basically. And during my postdoc at Technion, I discovered the blockchain was the end of 2013, and I completely crashed on it and quit the academy and made myself full-time on that. So I think excitement, and that's not just because of opportunity, also economical opportunity, but also really like strong excitement about a revolutionary change that is going to happen, is already happening. So that's the main of it. And I agree with Nimrod about the feeling of weirdos. Like initially I tried to kind of preach out to others, and the more I got like blank faces, I just stopped telling anyone about putting Ether in the crowd state of Ethereum. What's that? And now I'm a little sorry not insisting more on that, but what the heck.
I'll replace weirdos with finance geeks, but I think a lot of us who have been with this industry from 2010, 11, 12, and went to conferences, we found a lot of like-minded people. And these are very unique people. These are people who understand how economics and the financial system work, and are all and majority of which are computer scientists, and we're all talking batshit crazy stuff, and nobody listened. So I think this year the best thing that happened is we can all say we told you so, and I think that we've seen this revolution happening and becoming something very, very big, and a lot of people were skeptics, and then suddenly now people are sort of taking their defenses down and asking, okay, maybe there's really something there, maybe it is as big as these finance geeks, crazy people told us it is.
Thanks. So people really are, I think, looking at it as a paradigm shift, sort of like the world before and after the invention of blockchain. Yoni, can you share with us why you think this is so meaningful, also kind of like from a technological perspective? Why some people think it's a fad and other people, such as yourself, have been quoted that they believe this is as important as the invention of electricity or the invention of computers, and we're now just experiencing that for the first time?
I believe what we're seeing is as big as the invention of electricity, computers, the internet, and even has relations to sort of the invention of democracy. And the reason is we're reinventing money, and money plays the biggest role in sort of human progress, and is now for the first time being completely digitized. This is the first time people can own financial assets themselves. So money has been with us for a while, but we always had to place our money in a financial institution. This is how money works. Somebody owes you money. Somebody is the ledger. And this invention creates basically a public ledger where suddenly I can own my own money, I can decide what to do with my own money, and it's censorshipless money. And I think the reason it's very big is because it basically completely democratizes the value transfer. So if you think about ICOs, we've been investing, both iAngels and ourselves, in suddenly ICOs in Japan and Korea and Singapore, which was extremely hard before that because you don't really understand the rules of that. I've been paying programmers since 2011 in a lot of different countries in Bitcoin, where my legal department would never let me sort of create a contract and all of the sophisticated parts of employing someone who sits in another country. And I paid Vitalik Buterin in 2012 with Bitcoin, and that's really the beautiful thing about it. People move money much more easily. People create new companies much more easily. And the most important thing is everything is purely digitized. So this is digitally native money, and money is the biggest and, in my opinion, the most important product we ever developed as a human race.
Great, thanks. So 2017 has really been the year of the ICOs. We've seen well over, I believe it is, 1,500 ICOs, which exceeds IPOs that's been executed across global exchanges this year. So I believe Matan is in the best position to kind of comment on that, because a lot of people feel that there's a lot of hype around ICOs. Other peoples are pumping and dumping the tokens. There's a lot of dynamic that's happening in the ICO market. Do you think, from your experience, this is just kind of like the first few bumps in the road and everything will kind of fall into place? Do you think it'll still be a place where people are trying to exploit the network and in this industry to raise easy cash? Tell us a little bit about what you think about that.
So firstly, there's a lot of people tagging ICOs as scams, which of course doesn't make sense. I mean, there are scams, but it definitely not a general tag. So the reason that we have heavily regulated IPOs is to avoid scams, indeed, to avoid market manipulations, to insist on the entrepreneurs and companies providing all of the information to the market, to the public, to make the best decisions. And clearly, ICOs are not yet heavily regulated, and we see, indeed, companies and entrepreneurs quite often using that fact to, if not scam, somewhat market manipulate the public. Nevertheless, the super majority of ICOs are definitely not scams. It doesn't mean yet that most of them will succeed. Many of them, maybe the super majority of them are just bad projects, but definitely not scams. I think that the more we move forward, the more we see that the space itself, the companies itself, the culture of the blockchain companies are more and more self-regulating the space in a cultural way, like bad behavior is becoming less and less acceptable, and then less and less also adopted and invested in. So I believe that over time we will drive, I mean, the environment is changing so rapidly that it's hard even to keep pace of what standard in the space. Like every month, what standard is being changed. But over time, we'll be flowing into equilibrium whereby basically ICOs are, I would say, as, well, not, I wouldn't say safe, but as reasonable as the space of IPOs, but with the opportunity of the growth of a company from the beginning to the IPO stage, which is the, of course, the where all of the gain is also hiding.
Right. So if we spoke about some of the challenges and some of the regulation aspects, so I know a lot of people in other countries in the world are investing now cross-border. They have many times a hard time taking money out of their traditional banking system, and then when they're realizing returns, they have a lot of difficulty in kind of bringing money in and reporting it, being taxed on it. And we see the regulators trying to reinforce steps, coming out with different opinions about how this should be regulated and should be enacted. Yoni, can you share with us, what do you think regulation is going to look like? Will the regulators adopt this, or will continue to kind of push back a little bit? What will we see happening in that space?
I think first of all, how many people here actually invested in ICOs so far? Okay, so just sort of the idea of an ICO is for people to form a new type of basically company. So company is a company of people, right? So several people decide we form a company or a group, and then they create a smart contract and they say, send us Ethereum and we'll send you this new token, which basically is beyond the rules and regulations today of countries. So countries by definition and regulation by definition is hyper-local. So in Israel, you have the local regulator, you have the local banks, you have basically all of the local rules of what's right and wrong. But when you look at all of the ICOs, you see a mix of people from all over the world. And basically, all of the rules and regulations are not equipped to deal with that level of global interaction. So every regulator thinks they need to define the rules for how to operate in their country. And those rules are usually a bunch of legal mumbo jumbo. So this is not computer sciences saying X equals Y plus A. This is legal mumbo jumbo that you need an attorney that speaks the local language to actually interpret that. And this suddenly takes one layer up and says, no, everything is computer science, everything is code. And I think most regulators have no idea how to handle this. It's extremely hard for them to let go of that control. And I think we'll see sort of some regulators trying to figure out how they can use this and improve sort of the ecosystem. But so far we're also seeing a lot of, so small countries regulators like Estonia and Gibraltar are being very active saying, let's create rules, let's encourage people. I think Gibraltar was the first country to create like special rules for ICOs and DLT companies, and because of that now have hundreds of companies setting up companies in that country, where the opposite is China banned all of the exchanges in China, but actually what they did is there were 20 very big exchanges, let's say with roughly 1 million users each, and in 1 week they told everybody, stop, exchanges are illegal from now on. They invited all of them to a tea party and said, stop, no more. And they all closed all of the 20 exchanges, but Suddenly now there's 5,000 peer-to-peer exchanges in China. So they cut a monster with 5 heads, and now this monster has 5,000 heads. So because of how this technology works, it's extremely hard for regulators to actually make decisions in regulation to actually shut it down, because it's decentralized, it's beyond their control.
Which I guess brings me to the next thing. I think we're seeing challenges not only from regulators, but generally from different kinds of service providers, payment processors, that are really giving hard time to a lot of the crypto companies that are arising. I know there are companies that are having hard time opening bank accounts. They're seeing different types of challenges. Nimrod, you've seen this firsthand. What can you share with us about your experience for other companies? Where would you recommend incorporating? How has that journey of challenges shaped decisions that you've made in the company? And what can we learn from this?
So I think, first of all, Israelis have kind of a unique approach towards regulation and law in general, which is it's not forbidden. Let's find a way it can be done. And I think we're at a great advantage in that. It's been super unfriendly with all regulated companies. Just the fact we at Simplex, we don't touch or transact the crypto itself. We're just enabling the crypto sale with the fiat transaction. Still, having said that and explaining our model thoroughly and repeatedly to regulators and banks everywhere, the general response is, what? No. And I've said it in a panel when I was speaking with a few banks, and I said, I'm sorry to be the party pooper, but everybody here are talking about the great acceptance of blockchain technology and Bitcoin companies. And yeah, it's always the innovation centers. They're very excited. They want to test it and check it and play with it and tinker with it and integrate companies and integrate solutions. But when you start speaking with a compliance officer, he hangs up the phone. So it's we're not there yet. We're far from being there yet. Opening a bank account in Israel, we've been refused with a few banks. Anywhere else in the US, it took us about 8 months to find a bank. It's a constant struggle anywhere, even in Gibraltar, by the way, which are making a very interesting law, I think January 1st, right? They're publishing kind of a general DLT coverage for regulation. So any company holding or transacting in crypto assets that would have been required to hold a regular FCA license, had it been fiat, will be covered by this very general law. It's a very short one as well. Basically says, don't be an asshole. No, seriously, it's very general and very short. But it's a huge problem. I think that one of the side effects of crypto becoming such a main thing, at least for us, is that all of a sudden a huge amount of people who are real innovators and real techies and the fintech geeks all of a sudden have resources to start an actual revolution. We're not just sitting and talking and banging on the doors of the banks, but we can actually create a different ecosystem which functions properly.
It's actually really interesting what he said. Like, we created new money, Bitcoin, Ethereum, etc., now worth $500 billion or more, probably 600 now. So because VCs would not invest in the space whatsoever. So basically new money was created, and now most of the investments in the space are done through ICOs, which is that money that we invented. And the banks are still resisting. So there are a whole bunch of companies out there that raised $30 million, $50 million. They don't have a bank account. They can't open a bank account. So they start paying their employees with Bitcoin and Ethereum. Now it's interesting because people who paid, I just came back from Japan and I met a company that paid his employees in Bitcoin from last year. So he used to give them like 10 Bitcoins a month. That's now $200,000 a month. So suddenly they're all super rich. So all of the company, all of the employees, they're all super rich. and that sort of fuels itself. And the interesting thing is while the current ecosystem is sort of pushing back and not letting this go in Israel, it's extremely hard for these companies to even open bank accounts, that actually just makes it grows much faster.
The nice outcome of a new space, a new ecosystem where the super majority of entrepreneurs are actually super rich, makes a very interesting process of innovation, because now all of the entrepreneurs can really work on what they want to work without too much of hurdles, which really makes an interesting situation.
I agree, good point. Another center of innovation that I want to talk about in terms of kind of like a new approach is really DAO. I mean, I'm not sure that everyone in the room is familiar with the concept. How about you tell us a little bit about how do you define it, about the famous DAO and what's going on at DAOstack, and what do you think the future is going to look like?
Okay, so firstly, I'm very personally emotionally engaged with that. That's what drove me into the space, and I'm most excited about. I also believe that basically blockchain will come in 3 stages, 3 revolutions. So blockchain 1.0 was the ledger, Bitcoin and 1,000 forks. And then blockchain 2.0 was the contract, the computer, Ethereum, and we have like 10 duplicates right now. And I believe that the third innovation wave of blockchain will be the DAO. And it's already coming. So that's the first thing. The basics of DAO, actually not a lot of people are aware of the fact that blockchain or even already Bitcoin really brought 2 quite separate revolutions. So Bitcoin brought blockchain, the technology, but also brought crypto economics, which are completely separate. In Bitcoin, they are entangled, but for example, on Ethereum, you can completely separate blockchain from crypto economics. So blockchain is the technology to have consensus about something. Whereas crypto economics is the ability to design at the microscopic individual level economic incentive for certain very specific behaviors. As a result, you can engineer at the macroscopic collective level predictable behaviors. So the result of that is to engineer collective participation, collective engagement, collective collaboration. And if you need one image to have in your mind, think about flock of birds, a fish swarm, ant colonies, and just now try to translate that to thousands and millions of people cooperating spontaneously about shared goals. Well, people and computers. So that's basically what the DAO is, the decentralized autonomous organization, simply thousands or millions of people cooperating on something. It can be thousands of open source developers, blockchain developers, for example, and designers and talents that are all cooperating in building applications. It can be decentralized insurance network, decentralized investment network, perhaps. It could be crowd curators who form basically these gigantic curation of hotels or restaurants and then form a business around it. Just as the internet basically was a new form of media organization that was found to be super efficient with respect to legacy media channels, and they enforce them to assimilate in it. In the same way, I predict that DAO will be found to be super efficient with respect to legacy organization, and will enforce them to assimilate into it. So there is the infamous DAO called DDAO. It was May 2016. It was the first live experiment of a DAO. The excitement in the space was just incredible. In 5 weeks, it got a crowd sale of $150 million. And I'm not speaking like in the days right now, we have Bancor, $150 million. We have several of those. I'm speaking in the days where $80 million was like insane. So it was $150 million in 5 weeks. Everyone thought that that's it. That's like the space will be separated to before and after the DAO. And then as soon as the DAO got out there, there was major economic and governance protocol issues found. They were published. Actually, back then I was working on protocols for decentralized governance. We were the candidates to repair the DAO. We got like a informal approval that if we submit an application, we will be funded by the DAO. And we already started to prepare submitting that application, and just a few days before submitting the application, a bug in the code was found, and $60 million out of the fund was taken out. So that basically was a fiasco. The whole story ended and collapsed in a few days. And I think it also caused a major, I wouldn't say damage, but it was a major desert in the space. Like for 1 year, nobody was allowed to talk about the DAO or build a DAO. So now there is a major desert, and now we are coming back to the period where a lot of projects, including ourselves, but a lot of other projects are now building back infrastructure for DAOs. And I think in 2018, we'll see a bunch of live experiments taking place.
Thanks. So I want to touch on one other point. Even like talking to some of the people here in the crowd earlier this morning, still there's a sense of hesitation. People still associate cryptocurrency with fraudulent activity, illegal activity. This is something that Nimrod are very familiar with and trying to tackle. Kind of like, what do we see is happening in that respect? Because people are kind of like they want to attach themselves to what's going on in this industry, but they're still kind of thinking, okay, if I can pay anyone in Estonia, I can hire a developer, I can hire a hitman, I can hire whatever I want and just pay him with Bitcoin. How does that, shape this industry? How does it color some of the activities? Do you believe that the volume of these kinds of activities is going to significantly diminish in light of other activities that are happening? How do you see that unfold?
So first of all, I think that in order for crypto to be widely acceptable, it doesn't have to be perfect. It just need to be better than regular money, and it is. Just like, a self-driving car is not supposed to be perfect, just supposed to drive better than me. And apparently it does. So it's... And I think there are bad players, there is bad activity, but so it is with cash. We don't eliminate $100 bills just because some drug dealers are using them, and they're using shitloads of them. I think that Bitcoin is also not really anonymous, right? That's why Zcash was invented. The fact that it's a public ledger enables you to track quite a lot of the activity, and the way that currently exchanges and brokers and the way we work as well, the fact that we enforce heavy KYC, know your customer, and AML, anti-money laundering procedures on everyone getting in and getting out, actually is making it a much cleaner environment than the regular fiat cash environment by an order of magnitude at least. And just like any financial transaction, most of the transactions are still banks and governments speculating on the dollar exchange rate. So I don't find it as a flaw, the fact that still most of the activity in this space is also speculation, if that answers the question.
So I think just as we have the 3 waves of innovation, so 1, 2, 3, so we have the 3 ways of risk or challenges in terms of bad behavior, and we'll also have 3 ways or stages of cooperating with that. So, for example, Bitcoin, if you go six years ago, was very heavily used indeed by bad behavior. But I think by now, I think we would agree that it's pretty well regulated. It's pretty hard to actually, money laundry Bitcoin anymore. And now we came to blockchain number 2, or stage number 2, and the regulator is always like 5 years behind technology. So now the regulator is learning to regulate ICOs and smart contracts. I think the 3rd wave will actually be a real challenge, because I think most people are not yet aware of the risks that are in DAOs, but it's already a reality that in a few months, people will be able to launch funds for assassination that nobody control and nobody can stop, and if someone kills someone else, he can get rewarded. So this is a new domain for Exactly, that's a killer app, exactly. And like any technology, there are new challenges, but I can assure you that there are also new solutions, and that's I think the interesting path.
Great, thanks. I think that when we are now kind of signing off on 2017 and looking back at this last quarter, which has been phenomenal, I think, historical landmark in crypto history. Yoni, can you share with us what are some of the key drivers of what we've been experiencing in the last 3 months? And I think whether or not you believe this will be able to be sustainable and continue.
First of all, how many people here actually own Bitcoin or Ethereum? Nice. How many people here own Apple stock or Google stock? Okay, so that's what's happened in the last 3 months. It's equal. Okay, so the people who hold Bitcoin and Ethereum today in the world are gradually surpassing the people who own the largest stocks in the world, which is mind-blowing. Okay, Apple has been with us for a while, and yet there are more people. There are now a questionnaire in the US asking people, what do you prefer to buy cryptocurrencies like Bitcoin or Ethereum or stock like Google and Apple? And 2/3 said cryptocurrencies. What we were seeing in the last 3 months, and I'll include Israel and Europe, is we have offices with about 40 people in China. We're seeing now what the Chinese saw 12 months ago and what happened in the US 6 months ago. So sort of Europe is just being a bit later to the party. But in China, the 20 exchanges that got banned 2 months ago already had each 1 million users. Okay, that's more than the majority of brokers in Europe, the largest brokers in Europe, stockbrokers in Europe, but don't have 1 million users. Then in the last 6 months, there has been a crazy rise in the US for a couple of companies like Coinbase mainly that started rising exponentially really in the past 6 months. And now we're seeing this happening in Europe as well. So this is accelerating all around the world to what I call the digital gold rush. So people feel they need to own this. They see other people who made 10x on their investments. And even more conservative people say, I'll put everybody's talking about it. I think Bitcoin is now at 100% brand awareness with people who have money. So if you have a bit of money, you know what Bitcoin is, you heard about it, you talked about it. It's mind-blowing because stocks don't have that level of discussion. iAngels could not bring people here around stocks. It's what's happening all around the world. People are excited about some global revolution. The same meetings are happening now in 50 different countries with the same headline saying blockchain, Bitcoin, and people from all over are flocking with interest. And this is a paradigm shift on a very, very large scale. I'd say every day there are about 1 million people worldwide buying cryptocurrencies for the first time, which is a mind-blowing number. It's much, much bigger. This is 10 to 50 times bigger than the dot-com bubble. No, not bigger than the adoption of money yet. But bigger than any investable asset, bigger than any financial asset.
Reminds me of a funny story that I feel like sharing with the audience that just a few weeks ago, we had a friend or a colleague from the industry kind of like bet Yoni whether or not the Bitcoin is going to rise beyond 15K or down. We all know probably what Yoni believes it could do. And they bet a chunk of cash on which way it's going to go, and then as Bitcoin flew even higher, and Yoni won the bet, he told the guy, "Okay, so pay up." And the guy said, "Okay, fine, I'll just wire you like a quarter Bitcoin or something." So he ended up, holding it himself, anyways. And this is really, I think, what happens is with people who are investors, people who have money. We see this more and more. I have 2 questions left for our prestigious panel. I want each of you to think of a trend or a company or an ICO or something that you guys are excited about coming up, and share it with us, and everybody's going to take notes.
I'll be very collegial and say that the ICO of DAOstack is one of the most interesting things happening. I think DAO is very interesting because it's the next generation of ICOs. So the biggest problem with ICOs is people are sending, 1,500 ICOs, people are sending 10, 20, 30, $50 million to people they don't know over the internet. But then these people need to manage it on their own. And it's being managed in a non-transparent way. So I've invested in maybe 10 different ICOs. You send and then you pray. Okay, so it's spray and pray, but different type of pray. You pray that they don't steal your money and run away. And that's the difference. So in theory, DAO, when they replace as ICOs, you will invest in a joint pool, and that budget will be managed by the token holders and attention holders. So suddenly the entire budget, salaries, how what the company is spending the $30-50 million on will all be a set of rules and transparent. And I think that's a very big transition from how ICOs work today to how they'll work probably next year. It might take some time, but that's a very big difference about investing in something and have zero ability to understand their budget and to manage their budget and have that level of corporate governance.
So thanks for the promotion. Of course, I'm biased, so I will stick to the DAO space, but I'll try to touch on a less maybe known aspect of it. So most people that are speaking about DAOs are speaking about collaborations. So there are already like maybe 10 or maybe 5 competitors, significant competitors for platforms for crowd collaborations. The second known use case for DAOs are more like, and of course we in our platform, we already have a bunch of applications for collaboration that are integrated to our platform. The second use case is a little bit less familiar, is more about collaborative investment or collaborative insurance networks, and which is also very interesting. And we also have one use case of that which wants to integrate right now to our platform. But the least familiar use case is crowd curation. So, and I predict this will be a really, really big thing. So basically, just as Google is the thing that now tells us what is right and what is wrong, I believe that in the future, and not a very long-term future, crowds will actually tell us what's right and what's wrong, and will tell us much, much better. The reason they will tell us it better, because you can, again, with crypto economics, you can micro-incentivize people to participate in crowd curation, whereas today, curators, if you're starring a hotel, you don't get nothing of it. So when you can incentivize crowd curation, you'll get 10x more participation, 10x larger data, and much more. You would be able to wake up one morning and just get the one article out of the million articles that just went to the web, the one article that you specifically need to read today. So this will be a big, big thing, and they're already spreading a bunch of projects, also coming on top of our platform for crowd curation. I think this is super exciting.
So I think I'm excited about, 50 projects, which I won't start talking about. I think I'm mostly excited about the people. I think I'm mostly excited about all the new users and the fact that it's actually becoming something, mainstream, and the tailwind that we're finally getting. And we've been pushing this rock up the hill all these years, and now you guys come along, so yay.
Okay, final, to kind of wrap up today. I think I've been saying lately that I think the next dark ages are going to be when the power supply in the world is not going to be enough to mine new coins, and we're going to all start having shutdowns because the guy next door is trying to mine something. What do you think 2018 is going to look like? When you look into the future, what do you see?
I think just like every other aspect of this industry, it's like everything's on steroids. I spoke with someone about an ICO like a month ago. I told him it's not like it used to be 2 months ago. Everything changed now. So everything moves way, way faster. So I think we'll continue seeing this huge acceleration in everything. Everything will move way faster. Regulation, which we're constantly impacted by. Banks will have to catch up. Regulators will have to catch up at some way. Otherwise, everybody goes to jail. Everybody. And I don't think that's something that can be worked out. Banks will have to catch up. Financial systems will catch up. Much bigger organization will start getting involved heavily, like we've seen now with the futures, in other currencies as well, in other platforms as well. I think will become much more mainstream.
We have been waiting for a long time for what we call the killer app, right? Not the killing app, but the killer app. And I mean, we all feel that, we all know that there is this killer app, or maybe 10 apps that are going to be launched out there and will literally change, the way we are, the way we live, and gain mass adoption. Not adoption as investors, adoption as in users. So we've been waiting for a long time for various reasons. Like initially we didn't have the money. Now we have lots of money. We waited because we didn't have the technology maturing enough. I think now the technology is mature enough. We've waited for global awareness. I think we got global awareness. And I would like to make the bold prediction that 2018 will be the year that we'll see not one killer app, but like pretty significant number of killer apps, and that will change the blockchain from a theory into a practical, world adoption and business, if you want.
I think CryptoKitties is a killer app. So just to sort of first, I agree we're going to see a lot of new dApps and killer apps in 2018, but I also think we're going to see sort of acceleration of a bit of positions. So I think regulators and countries will have to make a decision in 2018. Are you pro or against the freedom of money? And this will be sort of the next stage, is going to be a discussion which involves politics, and it's going to be a discussion which involves the public, and people are going to have to choose a side. Is this legitimate for us to have freedom with our money, or does the country has the ability to decide where we keep our money and how we spend it, etc.? And I think we're going to see this discussion sort of escalate to levels where that's what we're going to see. Politics will become blockchain politics in 2018.
Maybe a quick echo of Yoni. I mean, I think one difference, the big difference right now, in the past few months, I've met two US congressmen, ex-congressmen, and I think until now it was kind of like there were supporters, but they were too shy or scared to actually pronounce that. And now everyone just feel comfortable with that. And this is a big change that it just pops up to the public discussion.
I think, by the way, what's interesting here, there are probably like 100,000 new millionaires around the world, which made their wealth in crypto. And when governments will try to make rules, these rules will try to basically take the money out of them. So this is not going to be easy. But then again, this is not investment advice. I also think 2018 is going to be the $1 trillion year. So market cap of all cryptos is going to surpass $1 trillion, and high chances Bitcoin in itself will surpass $1 trillion. And sort of those two things will feed each other. This is not investment advice.
We're going to cut that out. Great. I think we have just a little bit of time if we want to take a couple of questions from the audience. Okay, I'm going to repeat the question. Maybe we can briefly talk about security. There are people who have had their electronic wallet hacked, and how do we cope with that?
So the S in Bitcoin is for security. It's the responsibility of holding your own money, just like cash. And this is part of the usability that still needs to be worked out in many ways. Again, I'm repeating myself, but it's still a very early stage. Where's all your Bitcoins, Nimrod? And it's something that needs to be taken care of on UI level, on insurance level, and multiple other levels. I know of a few companies working on different types of solutions for different types of users.
Yeah, maybe just to add, I mean, I get people speak to me on a weekly basis about, you know, being able to retrieve their lost tokens. Just yesterday, two people came to my house to retrieve the lost tokens. One was just a technical UI problem. We just got the 200,000 shekels out in 2 minutes, and the other one just lost his money. So I do want to add that there is a lot massive industry of frauding and trying to steal money. So you do need to be aware of that. I know people who lost their money because of phishing. Of course, people, you know, losing their money because losing keys. This is by far number one killer. So try not to lose your keys. But it's true there is a lot of responsibility on the user, but you also need to know that there is very smart people are trying to steal your money, and it's good to be informed about, you know, best practices. There are best practices. Just be informed.
So I'll say something that in the crypto world people would crucify me, but unless you're an IT guy, you should consider keeping your money at places like eToro or Coinbase, where professionals take care of your private keys. There's always risk, which becomes credit risk. So if you keep your money at places like eToro, Coinbase, or some of the exchanges, your risk is what happens if this exchange disappears. So don't put your money in any way in a small brand, in an unregulated, like if you buy money, don't keep it there unless it's a big company, just because then you have to take the money out into a private wallet. But taking the money to a private wallet is a responsibility. Okay, I think each of us lost some bitcoins across time, and we thought, I lost 50 bitcoins. Okay, this was 5 years ago, so it wasn't a lot of money. Now I feel very stupid. So you need to make sure you understand what you're doing if you're keeping your own keys. The way to keep your own keys is probably using a USB hard wallet, and you need to make sure you have another person who knows how to access that hard wallet, and you need to keep the backup for that hard wallet in a safe in a bank. So that's the best way to keep your own coins. Hard wallet like Trezor, Ledger, seed in a bank, and have someone next of kin understand how to access it. So in case something happens, they can actually access it. Or keep the money at places like Coinbase, eToro, and maybe there are several other companies of sort of big enough for you to trust that they won't disappear.
Okay, just to repeat the question, just a question about fees and how do we move money around with the fees?
I don't really see the Bitcoin fee as a huge problem. I think that different currencies or different cryptocurrencies will be used for different uses. So if today for a large company like PIMCO in the States, it takes them a month and a half to settle a $2 billion transaction, they can settle it in 8 to 10 minutes and pay $100. It would be, you know, by 5 orders of magnitude better than what they have now. If you're trying to use Bitcoin to buy chewing gum, then it's just not used for that. Use Ethereum, use Bitcoin Cash, use a bunch of others. So again, I understand that currently it's you know, massively disappointing, but it's still in the course of the evolution of which currency is used where.
Challenges in bringing Bitcoin to traditional capital markets.
In traditional capital markets, there has been built risk management, like policies, procedures for years. So it's all about credit risk, market risk, operational risk. You have things like Basel and ICAP, which try to define that, to define how risky is your business, right? So insurance companies, in this mind of a computer scientist, is really, 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 really risky. Like it's the opposite of insurance, right? But nonetheless, traditional capital markets companies cannot understand the risk, which is becoming cybersecurity risk. That's the biggest risk of holding a lot of coins. So a PIMCO would hold, if they go in, they would hold $10 billion in cryptocurrency suddenly, right? They just go in, they just say, hey, we go into crypto, boom, 10 billion. How the hell, if I'm telling here people that to keep, say, $50,000 worth of Bitcoin is complicated, I don't think the technology is there yet to keep $5-10 billion of cryptocurrencies, because you would have, by definition, to split it between 50 different organizations. These organizations would need to get each insurance. So it's just not there. The market infrastructure is just not there to enable traditional financial services companies to get into that world. Second is market risk. So when the people who own Bitcoin here lost 30% on Friday, we're like, 30% today, we're used to that. Generally, the first rule in traditional money management is don't lose money to your clients. If you lose money to your clients, they're going to leave you, and if you're going to leave you, it's going to get really difficult for you to get new clients. So the first rule in asset management is don't lose money for your clients. Try to get the benchmark. Don't lose more than the benchmark. Don't lose money to the clients. That's impossible in cryptocurrencies. When something goes up 600%, 2,000%, you need to expect for it to go down 50% in one day. The traditional asset management, entire industry, family offices all around, nobody's willing to take that level of market risk. So it's really about sort of market risk is different, credit risk is different, operational risk is different. They're all 50 times more riskier, and that's why it will take time for banks and traditional financial companies to come in. And we are going to also scare them and keep on saying that because we don't want them to come in.
We saw a lot of tweets over the weekend of Bitcoin experts preaching people to hodl and to kind of like wait it out. And sure enough, it bounced back on Saturday. So I guess good advice. So it's a question about mining. Essentially, like for instance, in Bitcoin, there's a finite amount of Bitcoins that will ever be in the world. And this is because this was how Bitcoin was mathematically computed. And so today, I think, how many are there out? 16 million? 16 million Bitcoins out, and there are only going to be 21 million. So the way to mine a new Bitcoin is to be able to, in terms of calculation, be able to calculate the next part of the chain in the blockchain. And today it has become incredibly complicated to do that. If several years ago you can do it on your PC at home, today the amount of calculations required can host computer servers in hundreds of acres in places like China, Canada, and these facilities are mainly used just to be able to host that compute power to calculate that next part of the chain, thereby producing another Bitcoin. And this is how people produce Bitcoins, but the economies of scarcity of the finite amount of Bitcoins that there are ever going to be is what is really driving a lot of the demand-supply matrices that we've been exhibiting. But just the bit about mining, I guess, if this is helpful. Okay.
So the question is like, if you make a new token, new currency, what should be the size of the number of tokens in the circulation, right? So firstly, maybe the most important thing, the tokens are not atomic. Okay, so the Bitcoin can be split into half Bitcoin to quarter. In fact, it can split up to 100 million tokens. So there is an atomic unit, but it's 100th million Bitcoin. In Ethereum, it's 1 over 10 to the power 18. So 1 Ether is 10 to the power 18 We is the atom of Ethereum. So the real question, the bottom line, it's really immaterial. Like it's just a number, and everything will scale up or down with that number. So it's really immaterial as long as you have enough digits between the token and your atoms. It's really immaterial. That's the short.
Yeah, after traveling quite a bit to China, I have to say that from a culture point of view, we're more similar than we are to Europeans. But I think The language barrier is a big barrier, so we need more Asian-speaking people in Israel. But I think in this industry, so CoinDash, which is an ICO we're partners with and did last year, a lot of the business there is coming from China. So China is extremely active. Japan, extremely active. Both, by the way, constantly send to Israel teams of people from the big banks, etc., as well as Korea now starting to sort of look at Israel. So I think gradually there's more, but unlike we have in Israel a lot of European-speaking languages, and of course we think we know how to speak English, but there's very few people who speak Korean and Japanese and Chinese in Israel, and I think that's a barrier that we need to take care of because Asia is the largest market in the world.
Great. Thank you, everyone, for coming. We're all going to stick around to answer some more questions. Thank you, Yoni, Matan, Nimrod.